Hey guys, and welcome to the Working Money channel. Here it is pretty much in a nutshell. Look at the last couple of hours. Bitcoin price sneezed and XRP threw up. I don't know if you guys caught it, but Bitcoin did just technically make a new all-time high. We are now up, guys, to $71,800 per BTC. You can see that a little better here on the 5-minute chart. We did see that technically early this morning, 6 a.m. Eastern Standard Time, and now we're actually seeing the Bitcoin trend correct a little bit. Now we're sitting at about 71,500 per coin. So, guys, the trend is moving up. And to Bill's point here, XRP decided to throw up. So with that retracement, we did see an XRP price go up as high as almost 67 cents right up here. And then just dipped down. I mean, I don't know who put in this sell order here, but actually did dip down 53.3. Now we've recovered a little bit, so now XRP is sitting in around 62.4. Guys, don't worry too much. I mean, even Rob Art is noticing diehard XRP maximalists are making fun of XRP now for the first time and liking my jokes. The frustration is at its highest. I think, though, it moves hard and makes many FOMO back in. However, if it corrects hard with BTC beforehand, even more people will quit. And so he is waiting, I guess, maybe for another buy-in. Again, that coming from Rob Art here. The frustration is real. I mean, I'm not going to lie. The entire market is moving up, and XRP is, well, seemingly not doing too much. Right now, it's up just about 25.25%. Excuse me, not 25%, 0.25%. We've got the King Crypto, though. That is up 2.43%. And Extreme Greed, guys, still holding at 89% here. So we are still in extreme greed territory. The market cap is up to $2.7 trillion. So that is sneaking up slowly but surely as well. And we're seeing the crypto market volume up to 44.3%. But guys, the biggie here, Bitcoin dominance, still at 52.2. So Bitcoin is still rallying. Altcoins have to still catch up. And Crypto Caesar here, gives us a pretty good explanation. As far as the altcoin market goes, you are still quite early. Why? Purely because of Bitcoin dominance, or BTC.D. That is still very high. This means the altcoin market hasn't even started the mania phase yet. So guys, this is why we keep track of this number up here, 52.2. That means Bitcoin dominance still has 52.2% of the market share. When that number goes lower, what that means is the altcoins do rally up. They take more market share, and that means the crypto bull run is almost over. So we are not even in that phase yet. The mania phase begins when Bitcoin.D starts to drop sharply. This occurs when market participants are willing to take on more risk and liquidity moves into altcoins from Bitcoin, stablecoins, and fiat. This increases the market caps of altcoins, thus reducing Bitcoin.D. So let's just take a look at this chart that he posts down here. Okay, so just taking a look at the altcoin market, the altcoin euphoria top from back in 2018. You guys can see that back there. I was in the midst of this. This was kind of my first foray into crypto myself, and got really excited when I saw XRP move to all-time high. Of course, I did not sell. I did not know what I was doing at that particular time. But I've learned a lot since then and have changed my strategy. I've diversified my crypto positions. But anyway, just giving you guys a sense of what the chart looks like when Bitcoin dominance does drop. Then, of course, during the bear market and the altcoins, everything just kind of recalibrates. And then Bitcoin dominance slowly goes back up. Then we have another bull market, 2021. And of course, we see Bitcoin drop again. So guys, we are in and around here, okay? And the halving has not even occurred yet. And generally speaking, what we do see after the halving, we do see Bitcoin price continue to rally. Let me just bring up my halving chart, my Bitcoin halving chart here. And I call it my halving chart because I have plotted on the halvings, the former halvings in the past, and just to kind of give us a sense of where we could go and how long it generally does take post-halving for Bitcoin to reach its high. And I've showed you guys this on the channel in the past, but I'm going to do it once again. So in 2016, from the halving onward, okay, up until all-time high, that did take about 522 days, 524 days, give or take, okay? So the halving occurred in July of 2016, and Bitcoin did not reach its high until December 2017, 524 days. Let's take a look at the next one here. Just bring that over here and just bring this up for you guys. Technically, we did see Bitcoin top back in November of 2021. That was the last time we saw Bitcoin hit an all-time high from the halving in May of 2020. And again, guys, 550 days. So very, very similar to what we saw back in 2016, 2017. So if we were to take this measurement here, and if, the same thing were to occur, the halving is happening end of April, give or take. If we were to take roughly 500 and some odd days in here, let me throw this on the weekly. Maybe we can get a better idea of how long that would be. Okay, that would bring us to somewhere in and around October 2025. So guys, that is the projected time frame, at least, just taking a look at historical data. And we haven't seen that yet. He goes on to say, though, this doesn't mean Bitcoin's price drops. Quite the contrary, as Bitcoin will continue in its own mania phase to the upside. What it means is, as dominant falls and liquidity flows into altcoins, the market is willing to take on more risk. Hence, the reason why Bitcoin.D is always very low at the peak of every market or the end of any mania phase. This metric is usually a good indicator to signal potential market top. As you can see in the chart, during every market top, Bitcoin.D has been within a range of about 35 to 39%. So again, just taking a look at that, 35. Over here in 2018, it was at 36%. And then in 2021, it was at 39% over here. And, again, that's why we take a look at it. It's still at 52. So, guys, we still have some time to move. What this chart is telling us now is Bitcoin.D is beginning to top out, and it will very soon begin its decline to the downside. I still think we might have a little more upside before this capitulation of dominance begins, possibly 58%. Either way, my view is that we are very close to the beginnings of the altcoin season, guys, and indeed the mania phase. So we are, in fact, getting very, very close, despite the fact that, XRP is not moving. Kind of doesn't matter. XRP is nowhere near the last part of that phase. So, guys, the mania phase still has not occurred yet, as Bitcoin does reach some new highs. So it is getting very, very exciting. Of course, Bitcoin reaching new highs. That is the first thing that I think a lot of people probably noticed this morning. Willy Woo also mentioning this. The structure has the signs of a full-blown Bitcoin bull market. Price is ripping, lots of coins moving on chain, meaning real investors are buying at higher prices, validating this price move. So this is the Bitcoin cost basis density map, and it looks as though buyers are still realizing there are some deals to be had here. Back in 2021, that was kind of the beginning of the mania phase, which we are still, I don't know if we're technically in it yet, but we are starting to see more coins moving on chain, as Willy Woo puts it here. And so these are real investors now buying at the higher prices, validating Bitcoin's move to the upside. So another interesting metric here. Wanted to thank Crypto Caesar and Willy Woo just for posting that. The other thing we are in fact seeing, despite whether you believe it or not, is XRP is actually moving on chain too. $46 million worth of XRP, colossal sums by any standard, moved across the digital ocean in 4 separate transactions, this one courtesy of Michael Branch. He noticed the whale watcher move here. Enthusiasts who track large cryptocurrency transactions are glued to their screens this weekend. Over $46 million worth of XRP, colossal sums by any standard, moved across the digital ocean in 4 separate transactions. Each haul exceeded 18 million XRP, and their destinations unknown. Okay, so here are the whale alerts, guys. $11.7 million worth transferred from Binance to an unknown wallet. That was one of them. Some of the theories are accumulation, reserves, perhaps something else with no clear picture of the recipients. The community is rife with speculation. Some argue that these are strategic maneuvers by major investors accumulating XRP in anticipation of future growth. The Ripple network's upcoming advancements and potential partnerships could propel the token's utility and value. So another transaction here just printed. And we got some other graphs here too, just showing us the XRP movement. This one was price action last week. But while the whales thrash about, the XRP price remains stubbornly stagnant, despite an overall positive sentiment in the crypto market. So, guys, we could be seeing more XRP moving because the investors, the real smart money, realize that the price is poised for a breakout very, very soon. Again, we have not even seen the top of that mania phase. Bitcoin dominance still at 52.2. And, although we are seeing some altcoins already rallying, we have not seen cryptocurrencies like XRP rally yet. So, again, a mix of green and red. This, again, is a time when, some people are taking some of their profits, rotating into other cryptocurrencies. But could something else be at play here, guys? Could a fundamental shift in the banking sector actually be spurring on the potentials for some crypto utility moving into this bull run, guys? We're seeing a more liquid market. XRP is moving, and we have no idea where it's going. I mean, in some of these cases, we have seen XRP move overseas for on-demand liquidity purposes, so on and so forth. But, we really don't have any kind of clear picture. This is all still very hidden from us. But, guys, this could be another clue, okay? Check this out here from XRP Drops, the Fed's BTFP, okay? This is the Bank Term Funding Program, and this ends March the 12th, which is tomorrow if you guys are watching this on the day that I'm dropping it. And so now the question becomes, is that a flip that switch moment? Guys, this is directly from the Board of Governors, from the Federal Reserve, the Financial Stability Banking Term Funding Program. The Bank Term Funding Program was created to support American businesses and households by making additional funding available to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. The BTFP offers loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions, pledging any collateral eligible for purchase by the Federal Reserve banks in open market operations such as U.S. Treasuries, U.S. agency securities, and U.S. agency mortgage-backed securities. These assets will be valued at par. The BTFP is an additional source of liquidity against high-quality securities, eliminating an institution's need to quickly sell those securities in times of stress. So guys, this is coming due. The program is ending tomorrow. What does this mean, guys? Michael Branch here, bringing up some observations from cryptonews.net, okay? Check this out. So now that this program is closing, could this pose a potential banking crisis? Amidst anticipation of the U.S. Federal Reserve's Bank Term Funding Program, the community speculates a potential banking turmoil. While Monday marks the conclusion of the Fed's BTFP, researchers anticipate a renewed financial crisis in the banking sector similar to last year's debacle. I don't know if you guys remember last year, March 2023, the Fed's Board of Governors announced the launch of BTFP to support American businesses and households by making additional funding available to eligible depository institutions to help assure banks have the ability to meet the needs of all their deposits. The launch came following the fall of financial giants like Silvergate Bank and Signature Bank. Very, very curious indeed. And if you guys didn't catch the video I did on that last year, I will link that up here in the top right-hand corner. There was also a Bearable Guy connection to that, if I remember correctly. However, on February 20th, 2024, the Fed declared that the BTFP would cease making new loans from March the 11th, which is in fact today, and that it would quit, I guess, tomorrow, right? Because that is tomorrow. The end of the program would have completely finalized by March the 12th. Geiger Capital, a prominent voice in the financial sector, recently shared insights on the impending financial crisis following the cessation of the BTFP, adding that the New York Community Bancorp is collapsing. He stated, "Many regional banks are still in a terrible situation, and the Fed is ending their BTFP bailout." Now, you remember Jerome Powell did comment on this too. He did, in fact, make a statement that the banks would fail. There would be banks in 2024 that could fail, and he was actually quite certain that they probably would fail. I did a video on that just last week. I will link that one up here in the top right-hand corner. Crypto analyst Furkan Yildirim took to X to caution against potential banking chaos. He also shared insights on a more lenient monetary policy that could be adopted by the Fed to stabilize asset prices and prove beneficial for Bitcoin and the broader market. And guys, here is what he posted up here. With the BTFP's end, banks may face liquidity constraints impacting their operations and profit margins. This could slow down economic growth due to reduced lending. In addition, BitMEX's founder Arthur Hayes predicted a severe market correction following the BTFP closures. He asserted that it would result in a rough transition period for all asset classes, including cryptocurrencies. He added the market could face a harsh reality check without new dollar liquidity injections. Let me remind you how high we are here on the DJI, the Dow Jones Industrial Average chart. I think I just showed this the other day. You guys probably remember if you guys are watching my videos on the daily. I showed this to my viewers a few days ago from the top of the market back in 2007 all the way to the trough back in early 2009, guys. A full Fibonacci topping out up here at the 4.236. So the markets are looking very, very toppy, especially just according to pure fundamental and technical analysis. So should we be worried? I mean, Jerome Powell has been warning us about this, and now the BTFP program is closing, and that is going to take effect tomorrow. ISO 20022, let's do it here, also posted this. Okay, bank failures will start soon. This is a clip from Lena Petrova's show. Listen to this.
Why exactly does Fed Chair Jerome Powell say that small and mid-sized banks are in trouble? And more importantly, is it all by design? Is it intentional? Let's dive a little bit deeper, shall we? The first thing to note here is that the Federal Reserve is going to back off from its plan to require banks to hold higher levels of bank capital, which was the requirement, of course, implemented following Silicon Valley Bank collapse last year. Higher levels of bank capital effectively ensure that banks have more liquidity to potentially deal with bank runs. Now, the Fed knows that due to extremely high exposure to commercial real estate portfolios that are losing value as we speak, banks are going to have a really difficult time dealing with billions of dollars in loans that are due for refinancing this year. Yet, the Fed says, don't worry about it. You don't need more cash to cover those bad loans. We will just fold you into a bigger bank and your customers won't even notice. Or as an alternative, taxpayers will be forced to bail out those depositors of failed banks. Those are the two likely outcomes. Jerome Powell's comments highlight looming liquidity challenges for smaller and mid-sized banks. On March the 11th, the Federal Reserve will hold its support through the Bank Term Funding Program. There is a very good chance that it may trigger a ripple effect across the banking industry, especially as there is so much instability and this growing sense of stress that consumers are facing as they're taking on more and more debt. This crisis has the potential to have a massive ripple effect across global economy too, primarily because the United States dollar is the global reserve currency. If you're not familiar with how the Bank Term Funding Program works and why it's been keeping many banks open for the past year, really quickly I would like to explain. This program was established following the banking crisis of early 2023. The program was initiated by the Federal Reserve 1 year in length to banks, credit unions, and other depository institutions that want to pledge U.S. Treasuries, agency debt, and mortgage-backed securities, as well as other qualifying assets as collateral for these loans.
Okay, the clip goes on for a couple more minutes, but I will link this in the description of the video if you want to hear more. Just wanted to give you guys the synopsis there and, basically just a snapshot of what is happening. Lena here in this clip, she does mention that this could have a ripple effect on the banking sector, not just in the United States, but globally, okay? That is important to note. The global banking sector, of course, very intertwined with the United States of America, one, because of the United States' size, the sheer size of the economy, and also the world reserve currency, the US dollar. Well, guys, take note of this from Smoke here, Ripple's connections to FedNow. Now, remember, FedNow initially set up for domestic payments, but just pay attention, okay? Just read and understand. Simple as that, he says. With some documentation with regards to FedNow. The payment program FedNow is tapping 91 different firms for payment processing, and many openly use the blockchain tech of Ripple to give a dynamic facelift to the existing financial system. The most fascinating part of this seemingly standard upgrade is what you will find under the hood of this new machine. An array of partnerships between Ripple and companies like Valente, Fidelity, Instant Payment Services, Euronet, Finastra, and Cross River have been chosen by the Federal Reserve to put this plan into action. Now, even if you just step back and take a look at some of these names here, guys, Euronet, that is a European company. Okay, if FedNow is focusing on domestic payments, why would there be connections to Euronet? Also, I just wanted to mention Finastra over here, also a company that does work globally. So in many different countries around the world, does not just focus on the United States specifically. This web of connections dates back to 2014 when Cross River partnered with Ripple, and now they all find themselves in a select group chosen to roll out the FedNow program. So Cross River is also part of this and does have a connection to Ripple. What FedNow means is that the technology is going to be supported long term. This coming from globalpayments.com. Blockchain providers are providing real-time settlement across borders. Ripple's RippleNet, for example, links network users worldwide for real-time settlement of international transactions. Okay, over here, interestingly, the U.S. Federal Reserve has proclaimed the commencement of FedNow, and that was in operation since July of 2023. Coincidentally, only a few months after those banks did collapse. Finastra, Valente Technologies, and ACI Worldwide are Ripple partners that do also have a connection to the FedNow system. Okay, and also, guys, this, remember Jess Chang, formerly senior counsel at the Federal Reserve Board of Governors, did once work for Ripple, the Federal Reserve's payment services, including the FedNow service, so she was associated with that. Previously, she was deputy general counsel at Ripple, so did work at Ripple for a period there. Is it all coming together? Another one here from Smoke. FedNow will not be allowed to fail. So this is also something that really piqued my interest regarding the risk of loss of funds. If held with a private payment settlement provider, it is important to put the likelihood that this would occur in perspective. History shows that those institutions providing real-time payments would not be allowed to fail or be liquidated should they fail. So guys, again, with regards to FedNow, there's some more interesting points down here, and I will link this in the description of the video for you. So if we do see a failure of the banking system, maybe triggered by the BTFP closure, could we see XRP utility finally take shape? Well, guys, here's another clip of Greg Gammon flipping that switch on March the 12th. Listen to this.
So you know that you've got this switch right here, that all you have to do is, I'm going to flip that switch up, no more BTFP, come March 12th of 2024, and you know that your inflation problem is gone.
But replaced by what? Replaced by a banking crisis, which means what? Which surely means a recession, surely has broader ramifications.
And surely means
inflation.
CBDC.
Well, yes,
and surely means a CBDC.
So
there's that incentive layer on.
When we were talking in March, I had several guests on the show that actually predicted or forecast or made us aware, like you do, of the possibility of a consolidation of the banking sector, which allows for a CBDC. Fewer banks there are, the closer you are to the Fed, the easier it is to implement a CBDC.
Even if it's not the Fed's balance sheet. Let's just assume that all the banks got absorbed by JP Morgan. So you've got the Fed and JP Morgan. Well, let's remember who owns the Fed. That would be JP Morgan, that would be the banks. Yeah. So if there's only one bank, then they own the Fed, right?
The banks own the Fed?
Absolutely. Yeah, the Fed technically is a private corporation.
Right.
And they have shareholders.
Yeah.
And the shareholders are the banks that are within their network, in their system, right? So if there's only one bank left standing, then by definition, they own the Fed. Okay. So basically you have that Gauze bank type of scenario that we talked about earlier, which was the one bank in communist Russia that could not go bust. So whether that one ledger is on the Fed's balance sheet or JP Morgan's, it still doesn't matter for the average Joe and Jane. The net result is the exact same.
So, technically, for all intents and purposes, if there is one last bank standing and they cannot go bust, they cannot be allowed to fail, could we see some real XRP liquidity? Could we see the switch finally being flipped?
I'm going to flip that switch up, no more BTFP, come March 12th of 2024.
I don't know. It's a possibility, but just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.